So I told you guys this summer that SoFi is setting up for a huge move towards the end of the year, and boy, did we get just that. But now folks are claiming an even bigger move is coming, and I'm not talking about just another big move, I'm talking about a 3x or a 10x, and the next year from here is next. So you guys come here for the truth without the hype, and that's exactly what you're gonna get today. So, make sure you like the video if you like getting the truth without the hype, because guys, I don't know how else to give it to you except for just straight talk. I won't always get it right. I understand that completely. But at least you're getting an honest take and not just a hype take or something else of that nature. And yes, for those of you guys that asked me specifically, I left the biggest discount ever up for my group just for this week here, guys, just so that way you guys can jump onto it. I understand completely, not a problem. It's up there. It's the pinned comment down there if you're interested. But we need to jump into the content here. And after a massive move up from the summer, is this just basically the beginning, and an even bigger, most incredible 3x or 10x from here is coming? Well, guys, here it comes. I'm going to give you the 3 reasons why I don't think that's true for SoFi over the next year, or even 2 years if I'm being honest here. Not saying it won't happen ever, just saying I doubt very seriously we're seeing it here over the next year or 2. And I'll tell you exactly what will happen if that possibility does happen. If it 3x's or 10x's or whatever the course of the next year, I'll tell you exactly what will happen with that. And yeah, guess what, guys? Probably a lot of you won't be happy with that answer either. But again, I don't know how else to give it to you guys except for straight up, and that's exactly what we're going to do. So on to the reasons why I don't think SoFi is 3xing or 10xing over the next year. First up, sentiment is changing again. Now, guys, there for a while, it seems like sentiment was completely against SoFi. I mean, just they were being downgraded all over the place. Everybody was talking trash about them. And, basically kind of the finance media, you could just do a Google search, SoFi stock, and all the news was negative. And then all of a sudden, magically this summer, it started to change. All of a sudden, they were getting upgraded. All of a sudden, the news media and everybody else, the positive articles started coming out. Noto was getting more time on CNBC and all the other ones. And they were actually just saying, yeah, that's great. So if I move on, they went from that to, wow, they've really got something going here. This really can be the future of the banking. This guy really does know what he's talking about. All this positivity was coming up. And now we're starting to see just small little inklings of negativity starting to creep back into the stock after this big run. You're starting to see downgrades again from analysts. Now, you guys know my take on analysts. I don't care one bit what they say because they are simply doing whatever the heck their bosses are telling them to do. Go look up exactly their reason and the intent behind that job and everything else. It is not to give you an actual price target. The only thing I can say that it even kind of remotely tells me is where the momentum of the stock is currently going. And whenever you start seeing negative downgrades start coming, it simply could be, not always, but could be an indication that, hey, they're starting to move the trade the other way. Now, again, I'm not a trader, so I don't care. I don't pay attention to this sort of stuff. If I didn't have this YouTube channel and my group, I would pay zero attention to any of this sort of stuff because I don't care. I just buy when they're undervalued, like whenever it was, $7 earlier this summer or whatever the case was, or earlier this year, or $4 a couple of years ago, whatever the case was. And whenever it goes up on a run, which it does periodically, right? It was up over $20 per share back in 2021. I wasn't touching it back then. And even throughout this journey over the past couple of years, it would run up over $10 periodically and I would lay off. Just kind of basically do my modified DCA, stop my DCA completely. It would fall back down underneath 10 and just continue to chug right along with my DCA in regards to SoFi. So it means nothing to me. I'm not paying attention to it, but it could be a sign, could be is the key word there, a sign that Wall Street may be starting to kind of wean off their pumping a little bit of this stock. And that's just part of it. Now, can they defy that? Absolutely. Look at what Palantir is doing, despite the fact they didn't get the same level. They were getting upgrades, but not to this crazy price that they're at right now. I understand a couple of folks upgraded out there, but when you look at the full scale of all the different analysts that are covering it, you kind of see like those couple of folks that have been continuing to push it up are very much outliers compared to everybody else. So can it defy it? Absolutely, but it doesn't have the same momentum Palantir has, and it's not exactly the hot buzzword that Palantir is. And more importantly, they're not at the stage yet. They will get there, but they're not at the stage yet where they have the eye of those large institutional investors who are looking to plow big money into the stock. SoFi isn't there yet. Palantir is over there on that scale. So that's why I don't really think that's the most likely scenario we're going to see. However, it does point to our next point, which is SoFi is caught up in Wall Street's games. All right, now we've been talking about this in my group now for probably close to a month as to why the market is pumping, what's going on, all that sort of stuff. Let me break this down quite simply for you. In terms of, there's all kinds of, everybody point to this chart and that graph and this macro and the election and all this other stuff like that. Cool. It was pumping before the election. It was pumping, remember, September, October, November is supposed to be terrible months for the stock market. They were incredible months for the stock market. All that was before the election and everything else. So it's not any of that sort of stuff. The reality is when you came into that time frame, Wall Street was behind. They were significantly underperforming the indexes. Think about that. The indexes now are almost at 30% for the year. Just a simple S&P, ETF is crushing hedge funds. There are a lot of hedge funds that are negative right now. Some of them just now turned positive. Some of them aren't even to 10% returns yet on this year, which seems ridiculous. And how is that even possible, considering I know a lot of you guys out there are up, 70%, 80%. We got people in my group that are up 150% just this year, just year to date. I mean, the gains, it's been hard not to make money this year. Like, I don't know how you didn't make money this year, but yet there's hedge funds out there underperforming. And they're saying, hey, we need to at least try to get, again, routinely hedge funds underperform the indexes. That's why dead people beat hedge funds. And it doesn't matter what kind of hedge fund you want to look at there. Sure, there are some that are outperforming, but the vast majority of them, especially when you average them out a long time, underperform the market in general. But we're at the end of the year here, and guess what they want? They want bonuses. How do they get bonuses? By pumping up stocks and then taking their profits whenever that price gets ridiculous. And they don't care about valuation. They don't care about anything else. And if the momentum can continue on a stock, kind of like we're seeing with Palantir right now, and obviously we've been seeing with SofI as well, and a lot of other names that we love, they're going to continue to pump those. And whenever that momentum finally dries up, they're going to take their profits, show their clients, hey, look at what a great job they did. But the reality was they were just padding their bonuses. And unfortunately, SofI is one of the stocks that kind of looks like it's been tagged as part of that group that can easily move a stock up and easily get it pumping. And that's what they're doing to it right now. Wall Street needs bonuses. They need to at least save a little bit of face. I mean, you can't go in and have the S&P return 30% and you only return 3%. And there was a lot of folks out there looking at that sort of come, September, October. That's what they were facing, was the S&P charging forward. They were sitting down at basically flat for the year. And so they had to start doing some extreme things, some extreme pumping, a lot of different games being played right now to get these stocks moving up quickly so they could try to save face and try to increase their returns towards the end of the year and try to catch that S&P fund. And unfortunately, I think SofI may be caught up in a lot of that sort of garbage. And hey, that's part of the stock market. Benefits those that are paying attention. And of course, it hurts those that were trying to play games, trying to be tricky, trying to get in and out, and do all these other garbage like that, trying to act like a hedge fund. Cool, you'll get the returns of a hedge fund in the end. And you've seen, it doesn't matter who you are, how smart you are, the macro this, all these different charts and graphs and all that sort of stuff like that. Didn't matter. It didn't predict anything, didn't help any of those folks who was supercomputers and Harvard MBAs or, every indicator in the world. Didn't help those folks outperform just us as retail investors, just simply buy and holding. But I also understand that they are caught up in Wall Street's game right now. And that happens from time to time. That's why you want your stocks to kind of go from unprofitable to profitable as quickly as possible, and then start moving to the S&P and some of the other screeners, so that other way they can get much larger institutional investors involved with the stock, so that way they can help stabilize the stock over the long run, and you don't get these wild ups and downs. I understand Tesla's the exception. I would agree there completely, but the rest of the stock market, that's pretty much how it works. But unfortunately, SofI is caught up in this right now. And number 3, simple valuation. Even if I give SofI a full fintech multiple, I say screw the bank multiple, it's not a bank, it is strictly fintech. Even if I give it that multiple, it is still overvalued today. Those are facts, guys. That is just the way that it works. And I'm not saying it's crazy overvalued. I'm not saying this is, Tesla 2021 overvalued or anything else like that at all. I am not saying that whatsoever. But even if I give it that multiple, it is overvalued. So it tells you, if you give it more of a hybrid multiple, which is what I personally believe it deserves, it is obviously really overvalued. And remember, in the end, we don't determine what the valuation is, what multiple is going to get paid. Wall Street will determine that, right, wrong, fair, unfair, whatever the case is. That's the reality. So unless you think Wall Street is going to give it a, fintech multiple, well, that's the only way you're remotely close to being somewhat fair value right now. Otherwise, you're significantly overvalued. And when I'm thinking about a stock 3xing over the next year or 10xing over the next year, you usually aren't in that situation of you're profitable and you're overvalued and yet you're still going to 10x for the year. Just not normally how it works in the stock market. Not saying it's impossible. We'll talk about what happens when that happens here in just a second, but that typically is not the way it works. Now, yes, I agree. A high growth stock gets overvalued at times, sometimes a lot overvalued at times. I would agree there completely. That's why I'm not concerned with it. That's why I'm not trying to sell it or time this or jump in at this price or whatever. I'm not doing any of those sorts of games. And I agree. I'm not even considering selling SofI at this point. I have no reason to. Not even on my radar, not even something I'm even thinking about. Don't ask me what price I would sell it at because I don't know. I haven't put any thought into it because we're nowhere near that mark. However, if you think a stock can just continue to be overvalued like this forever, or even 3x or 10x, and everything's just okay, well, that honestly is just silly because valuation is what matters in the end. And guess what? I heard that same talk back with Tesla 2021, and tell me how that worked out. I don't know. Didn't work out too well for the vast majority of folks out there. So valuation clearly matters, even with a high growth stock with a great future, regardless of what stock it is. Valuation is what matters in the end. And right now, no matter how I slice it, the valuation is overvalued. But you must understand this next point. Guys, I can't emphasize it enough. Otherwise, you are going to just be in la la land and lost with SofI stock if you don't understand this next point. Huge warning about a big run. Now, hear me all the way through this. Don't just jump down after listening to what I'm about to say right here at the beginning and just blast me in the comments. I'm okay with being blasted, by the way, down in the comments, guys. Please do. I get it. I don't always get everything right, but at least hear me all the way out so that way you don't go down and blast me on something that either I didn't say or I address directly here in the video. Now, if SofI has, from here, another 3x or a 5x or a 10x over the next year, I will absolutely hate it as an investor because it forces decisions on me that I don't want to have to make, and it puts me into playing Wall Street's game in the end, which is how you lose over the long run in regards to the stock market. Now, remember, talked about it in my last video, actually, long-term for me is not 1 year. It's 3 years, 5 years, 10 years from now, 2 decades from now. That's kind of my time frame I'm looking at. I'm 47, which means I'm going to be investing until, if I'm able to live to 80, till I'm 80. So I got a long ways to go in this game. And so do most of you guys out there. So you got to start thinking of these things a lot longer than 6 months from now, a month from now, 3 months from now. Some of you guys are on like 3 day or, 1 day. Hey, pre-market's high. Oh my gosh, what the heck's going on here? What do I do? What do I do? I don't know. It's the pre-market, Who knows? Wall Street's going to do what like they want to do. Halftime whenever it's up in the pre-market, then it's down during the regular market. Who knows at this stage? I'm not worried about that sort of stuff. I'm not thinking short term. However, what happens when you have a big run like that is you're forced to start thinking like a short-term trader instead of a long-term investor because you pulled so much of the future into the now. Now, I'm okay with a stock trading down for, months, maybe even a year or two. I'm okay with that. That happens all the time, especially whenever the fundamentals are getting better, but the stock keeps trading down, which was basically SofI the previous 2 years, right? I mean, it just couldn't catch a break. But yet, the fundamentals were getting better month after month after month after month. Same thing with Palantir. Tesla went through a period of time like that. Apple goes through periods of time like Google. I mean, you name it, Meta, everybody. Fundamentals get better, but the stock price stays beaten down. I'm okay with that. But when you pull years worth of profits and revenue into the now, it forces me to be a trader, and that is a losing game in the end, but I don't have a lot of other choices if that happens, because there is nothing fundamentally there to justify the price movement. Not a little bit, not, hey, a few earnings calls can be really great, or maybe next year's guidance and earnings will be better and it'll make up for all this. No, you have nothing there for years, and you don't get 50,000+% returns on stocks by them having hype runs like this with nothing fundamental underneath. I'm sorry, that is not how it works. And those are the type gains that I enjoy getting in the stock market with no effort. Not this type of stuff right here, where there's so much more involved and it turns you into a trader from a long-term investor. You get periods of time like that, and you get returns like that of 10,000, 20,000, 50,000%, 150,000%, like some folks have in NVIDIA right now and such, by simply continued sustained execution of a company over time with fundamentals to support it. Sure, they have runs where they get overvalued, as every stock does. This, basically stock price goes like this. You get overvalued, you get undervalued, you get overvalued, you get undervalued. That's the normal life cycle of a stock market. But when you get these sorts of runs, what you end up with way up here, and then you end up way down here, and you stay down here for years. And that's the type situation that really sucks as an investor, because now you are forced to trade the stock in the end, and that's not the situation I like being in. SofI 3Xs or 10Xs next year, that's going to be the situation that we're going to find ourselves in. And that's not why I own the stock. Now, yes, I agree. Getting a 3X is great. It is absolutely wonderful. But a great company is not just going to give me that first 3X. They're going to give me another 3X, and then another 3X, and then another 3X. And what did I have to do during that time to gain those 3Xs? I had to do nothing. Just hold. Do nothing. Add on the dips if I want more shares. Remember, you can think about it and think about Palantir right now, the run that it's on. How many of you guys are left saying, I wish I would have bought more? Well, you wouldn't be saying that if it had a nice normal march up and you were just buying on all the dips. You'd have all the shares you want plus bonus upon bonus shares, kind of like a lot of us have here, because you got basically a 2-year period or so where you could buy this stock ridiculously cheap and you just continue to add shares. Now, extrapolate that out over a decade where you have not a crazy hype run up, but you just have a slow, steady gain where it gets overvalued. Absolutely. It gets some hype behind it. It gets running, but there's fundamentals underneath there to support those fundamentals. Maybe it's slower, maybe it's 2 quarters away instead of in the immediate, but there's still something there because it didn't get crazy overvalued. And unfortunately, I want multiple 3Xs in SofI over the course of years. So I'm not forced to sell and then pay taxes and try to figure out how I'm going to get my next 3X. That's ridiculous. In the end, how you get a 10,000% return or a 50,000% return or a 150,000% return like some folks do. One, you got to have the right stock. Of course, picking a great stock, of course, is the first thing. But second thing you have to do is you have to have nice, steady, fundamental growth and have periods of time where they're absolutely overvalued, but not crazy overvalued like we would be if we started seeing that. So yes, I agree. 3X is great. I don't want a simple 3X on a stock. I'm not in SofI just for a 3X. I am in SofI for a lot more, but I know that's going to be over the course of a decade or more. And I just want to be able to hold it and add on the dips when Wall Street gets stupid. The game is very simple, very low stress, very pain-free in a lot of different ways. I'm never scared. 2022 was the best time of my life in the stock market there because it was just so easy to buy stocks. And hey, okay, they dip, cool, I'll buy more. I mean, it was really a great time. However, this is the one unique anomaly type situation that I hate because it forces me to not enjoy my fun ride, to not just have it easy all the time. I've got to, now I've got to consider taking profits because I know it's going to trade flat or down for a period of years, not days, not months, not just a year, years if they pull that much forward. And that's a crappy spot. Now I got a tax bill to pay. Now I've got to figure out when I'm going to buy the stock again because I still think it's a great company with a great future. There's so much more that goes into it, and I don't want to be in that spot. So that's why I don't want to see this at all. I don't think it's going to happen anyways because of the reasons I just outlined. But if it does happen, that to me is the danger of it as well. And hey, some of you guys are happy with a 3X. Great. Some of you guys are happy chasing all the time. Awesome. But I think back to 2021 when everybody had the same exact thought process, and tell me how the past 3 years of your investing has been. My guess is you haven't enjoyed it nearly as much as I have over the past 3 years since that time frame. So to be clear, we are not there yet. But if some of these ridiculous price targets and some of these ridiculous predictions that people are making right now do come true, that's the spot we're going to be in. That's definitely going to be something you have to consider. And remember, if you want to see exactly how to do due diligence, understand where valuation is, you want to be able to talk to me about what's going on with SofI right now or Palantir or anything else of that nature, make sure you check out the pinned comment. Yes, the biggest discount ever is still live for those of you guys that asked me to leave it up there a little while longer for you to take advantage of. So definitely do that. You get free coaching, you get 5 free courses, stock analyzer tool, you get access to so many different things there in the group. Again, you get access to those folks that are, some of these folks are making $1 million in a month. That's how incredible their portfolios are rolling right now. So you get access to those folks too. You can absolutely ask them questions. Make sure you check out the pinned comment, see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.